Hi, everyone. I'm Elizabeth Galbut, one of the co-founders and managing partners of SoGal Ventures. So excited to be here with everyone today. Um, this from the speakers I've seen so far have been absolutely awesome, and a lot of funds are funds that we co-invest with at SoGal. So a little bit about myself and kind of like how we got into venture and why we do what we do at SoGal. So I started my career in venture capital while I was going to business school in Baltimore. And there was not a lot of capital flowing into the Baltimore ecosystem at that time. And I actually started my first fund during grad school to invest in that ecosystem. And I later met my business partner, Pocket, to start SoGal because she was kind of doing something very similar in the LA ecosystem, but really focused on women and diverse founders. And we came together to form SoGal. We just finished up investing out of our Fund 1, which I'll tell you guys a little bit about. We are now investing out of our $100 million Fund 2. And we really created this Fund 2 as sort of what we're calling capital confidence, to provide capital confidence to women and diverse entrepreneurs who dare to change the world. We invest in how the next generations live, work, and stay healthy. So that means consumer tech, health tech, enterprise software that's really shaping the future of work. And sort of our sub thesis is in what we call global first borderless businesses. So this could look like perhaps you're an immigrant or a first generation American, or you're from, or even have your business built somewhere else, or have a distributed team, or have manufacturing somewhere else beyond the US, or, for example, want to go into multiple geographic markets with your startup. We do a lot of work with our founders around global first borderless business is what we call it. Then what we call design-driven companies. So I'm a designer. I'm also a professor of design, and a lot of support we provide our entrepreneurs is thinking about kind of, is your product actually solving the right problem for the right group of users, and how have you gone about that product design sort of process, and how can we be supportive in that? And then a lot of our companies are what we call community-built businesses and brands as well, which we think is really important for sort of building the next generation of multi-billion-dollar businesses. So we really believe in the rise of the rest of us. The world as we know it today was created by a small group of people. And I'm sure you all know the investing stats are just absolutely terrible. And we really believe that the answer for the future lies in the power of underrepresented people and communities, and that it's really time to unlock all of our amazing talent and unlock that with capital and conviction. So we're entrepreneurs also. We were never just a VC fund. We started as a 2-woman team in our 20s, and we built everything from the ground up: a VC fund, a nonprofit foundation, which I'll talk a little bit about, and what we really think is a global movement. We really are looking to be, right, the lead partner of choice for pre-seed and seed women and diverse entrepreneurs. Through our foundation, we have over 50 global chapters across the world in 22 countries over 6 continents. If any of you happen to be in Antarctica, that's the one continent we're missing. But we really empower local communities to lead entrepreneurial educational programming, as well as bring investors together into those local ecosystems, as well as a number of other programs we do through the nonprofit foundation. So with our $100 million Fund 2, we're making $1 to $3 million initial investments at the pre-seed and seed stage. In this fund, there'll be 25 to 35 core investments. We are looking to take a lead investor role in board seat with kind of a 10 to 20% target ownership. And a big learning we had from Fund 1, which is where we invested in 42 companies, was we saw a lot of our founders basically having to go around for a year or two trying to raise multiple seed rounds, on, let's say, a safe note, and sort of cobble together, $10,000 check here, $5,000 check there. And they still did amazing despite this. But we really want to be able to provide that capital confidence to the companies we back, where we kind of, are taking a large part of your round. We're connecting you with a few other aligned investors, and that you get done with fundraising, in, let's say, a month or two, and can go back to actually building your business. Because we think this is a really big area where a lot of inequality and sort of bias still exists. And based on how much you can focus on your business versus how much you're focusing on fundraising, does impact how quickly you can grow your business. And so a big piece of our fund too is really kind of hopefully giving a more level playing field to the 25 to 35 companies that we are investing in. So in our first fund, we already have 2 unicorns and 1 soon to be unicorn. So on the left, Everlywell is an at-home lab testing company. They were actually the first to come out with a COVID at-home test at the beginning of the pandemic. Function of Beauty is a custom hair and body care company, and Lovevery is a really cool sort of science-based company to help babies, toddlers, and infants grow and develop their brain. We also really like to help our entrepreneurs land what we call sort of top tier follow-on financing, and really get you prepared as you grow your company just beyond the pre-seed and seed. So that's a lot of value. Where we add is really helping with you understanding, how should you go about the next round of financing? What milestones do you need to meet before your company's in a good place to raise the next round at, a competitive valuation with competitive investors, all trying to, now track you down and throw you money. That's the dream, right? So we're really trying to help with that. And we're just huge believers that difference is our superpower. Throughout our entire portfolio, we've seen this played out time and time again, that founders, when you are authentic to yourself and the problems that you've seen in your life and are building for the rest of us, that it creates really, really powerful businesses. So we're really big supporters of that and believers in that as a competitive advantage. And I hope, many of you can find aligned investors that want you to be your authentic self and build authentically the company of your dreams. And we really believe, like our portfolio-shaped society, we don't really like investing into companies where we're not sure that's the future we want in this world. So an example of this would be when drones were the hottest thing. We didn't think, having, thousands of drones fly around like mosquitoes to basically like enable us to be better consumers was really what we wanted the future to be. So we weren't investing in any of those types of companies. On the flip side, we really believe in sustainability. So a lot of our companies are either B corporations and or focusing a lot on sort of triple bottom line, as well as sort of what we think sustainability is, or even some topics that aren't so often talked about. For example, we have a company in Fund 1 that's really inventing the death care space and how we talk about grief and grieving and sort of loss. So this is a quote from one of our founders, that we've really built a fund that differentiates on empathy without compromising on wanting great financial returns. And I think this really gets to the heart of who we try and be. For our founders, we want to be both a friend and investor. We want to be the first call when, excuse my cursing, but shit hits the fan. And we try and be there for our founders any way we can, in just open, honest, transparent, and vulnerable ways. We're entrepreneurs too. We get it. So that's a little bit about sort of us. And with this new fund, we're really trying to provide capital confidence, board leadership, and community power. With this fund, we are investing at sort of the pre-seed seed stage. Something else that might be of interest for the group is we do have, through our foundation, a Black founder grant program that is for Black, female, and non-binary founders that are more at sort of the friends and family angel stage, that are a bit too early for true pre-seed seed investment. But with the grantees we select for that, you get a $5,000 to $10,000 non-dilutive grant, and you become part of sort of our community and cohort where we do a lot of programming specifically for this cohort. And we just partnered with Walmart. We've done 50 grants so far through that. But we just partnered with Walmart to do another 60 grants specifically for folks in the retail and consumer space. So let me right now put in the chat where you apply. It's a super simple application. We tried to make it as easy as possible for everyone. The demand has been insane. We've had over 100,000 startups apply, but we do go through all of them and select amazing people, and I hope many of you apply, and I hope we end up picking some of you as well so that we get to work with you all. And the goal of that is really getting you to be at the stage where then you'd be ready for pre-seed and seed capital. So with that, I'd love to take sort of any questions.
I'm here, Elizabeth. You hear me?
Hi, Kenneth. Yeah, I can.
How's it going? You know we got some questions for you.
Yeah, I'm ready.
Yeah, the questions have been coming in steadily throughout the presentation. Appreciate you elaborating on what SoGal Ventures has going on. The top requested question right now is the grant only for Black women / non-binary, or can Black men apply as well?
Yeah, so it is for Black women and non-binary founders. It doesn't have to be that the Black woman or non-binary founder is the CEO. If there's one part of the founding team, that counts.
Got it. Next up, what sort of traction do you expect to see from early stage startups raising that pre-seed?
Yeah, so that's a great question. And I think it really depends on the industry you're in, sort of how capital intensive your business is to get any type of traction, right? For example, if you're a biotech company, you need a lot of money before you can have any traction. Versus if you're more a consumer social company, you can definitely build some stuff and have some traction before you raise the money. So I think we at least want to see that you have used sort of hustle and grit to find resources to build something. It doesn't have to be a final product. It can be, an MVP. It could be a wait list. It could be, a Kickstarter campaign, anything that just sort of shows like you've done something and there's people that are interested in what you're doing.
Got it. I appreciate you. I feel like you just dropped the gem there, Elizabeth, saying those different ways you can have that proof of concept without having the final product.
Email wait list, or you already have had a community around something and now you're expanding that community and productizing or servicing it in some way. So I think there's really so many different types of traction. It's just really your narrative around how you've been able to create it.
Got it. Next up, how does SoGal define pre-seed? And also, this is a dual question. Would you be open to investing in footwear brands?
Yeah. So I don't think we've ever invested in a footwear brand. I wouldn't say we're closed off to it. We're usually pretty open investors, especially if there's something interesting about it. Pre-seed would be kind of, you're thinking that you need to raise anywhere from like 500,000 to 2 million. And you're defining kind of your milestones as, refining your product market fit, getting and sort of engaging your first real group of customers in a meaningful way, and sort of testing out different channels of marketing and acquisition to see how growth happens, because a lot of seed investors are then looking and kind of saying, okay, you have something, how do we use the capital then to grow the something that you've created?
Got it. Next up, you elaborated a little bit around the criteria for the investments, but somebody wanted a follow up. Krista wanted to follow up around what the criteria specifically is in regards to grant recipients for folks trying to look into the grant program.
Yeah, so the grant is really like a lot of the grantees are still working full-time jobs, and this is kind of a side business that they're trying to get up and running. So that's kind of how early we're even engaging with the grantees. So you do have to kind of have your business incorporated as at least like an LLC. We want you to have not raised more than $3 million. This is really for people that haven't raised a lot of capital yet. That you sort of have an idea that if you were given the grant of $5,000 to $10,000, like how would that meaningfully help you do something that you're looking to do? It could be, you know, hire a freelancer to help you with the final 3D design of your product, buy the initial inventory, you know, pay an intern, like just some idea of like what you'd actually want to do with the money that would help take you from sort of the idea stage to like actual execution stage. And that you have ambition to hopefully be a multi-billion-dollar company in the future and raise venture capital. So for example, we've had a lot of businesses apply that are like restaurants or like a retail store. That's probably not what we're looking for in the grant. It's more sort of startups that do want to eventually go the venture capital route. And we're kind of being a launching pad and sort of that friends and family money to kick things off.
Got it. One more question came in around what if they do not have a team yet? Can a solo entrepreneur still apply to the program?
Yeah, many of our grantees are solo entrepreneurs, so you can definitely apply.
Got it. And you touched on investing worldwide. Essentially, you said the only place, right, would be Antarctica, right? So I'm curious. In terms of the question that came up, do you invest in Nigeria? Was their specific question? But I guess I'll kind of flip it a little bit and say, you know, what investments you do have in Africa, kind of overall.
Yeah, so I do have a few investments in Africa and one in Nigeria specifically through my first fund, the one that was based out of Baltimore. I don't know if you've heard of a company called Helium Health. They're kind of an electronic health record for Africa. In SoGal Fund 1, we got really close to investing in a couple of companies in Africa, but we just didn't have the infrastructure to fully diligence them properly to a point where we were getting comfortable. With Fund 2, we're also building out our team. And a big piece of that is to be able to have more geographic diversity and be able to have sort of local subject matter expertise. We do have a SoGal Nigeria chapter that does programming in Nigeria, and it's run by a few women that actually have a VC firm down in Nigeria specifically. So definitely look into that as well. And I'm also going to post in here the application to join our team. We're hiring like about 4 individuals right now. And if you have friends who want to be in venture, or you don't know if you want to be an entrepreneur, you want to be in venture too, definitely please apply to our team as well, because we're really looking for awesome people right now.
Okay. Next up, we have a question from Mia. Do you invest in service-based ventures with no physical or tech products, i.e. membership-based wellness services or community spaces?
Yeah, so I would say yes. So in Fund 1, we have a company called Real, which is a mental health platform that's really trying to make mental health services more accessible through a membership-based model. We also have a company called Parsley Health. Both of these did have, you know, actual locations before the pandemic. Real has now moved mostly just online and through their app. So I think we are definitely open to that, and we've invested in that before.
Got it. You mentioned the LLC in talking through your presentation. Somebody asked, Alyssa asked, do you prefer founders have their business incorporated specifically in Delaware? And should it be a corporation or LLC?
Yeah, so this is a great question. So for the grant program, we just require you to be a business, right? Like whatever type of business you prefer. A lot of people do prefer early on to be an LLC because if you're spending money but not making money, that can actually help you on your own personal taxes as a write-off. On the venture side, most venture funds will only invest in Delaware C corporations for tax reasons that are kind of complicated, but basically it makes taxes super complicated for our LPs if we don't invest in Delaware C corporations. But the good news is you can pretty easily convert your LLC to a Delaware C corporation when you're ready to actually take on VC money. It's something that takes like a day with your lawyers and a couple $100s. So if you do want kind of the tax benefits of an LLC in the beginning, when you're bootstrapping and kind of getting things off the ground, that's kind of the common choice I see for founders. And then as they go on to take VC money, they'll convert into a Delaware C Corp.
Got it. And don't we all just love taxes, Elizabeth?
I know. Bane of, I don't get why they're so complicated. Like, just make it easy.
I'm right there with you. Next up, we have how do you determine? This is a pre-gathered question. We gathered this from a few founders that chimed in previously. How do you determine if you will invest in a second funding round for a startup?
Yeah, so that's a great question. So when we modeled out our first fund, the average sort of like graduation rate from a pre-seed or seed stage company to the next funding, like across the industry, is about 25 to 35%. So we kind of like modeled that out in our first fund. What ended up happening is we had over 90% graduation rate in our first fund. So we had to be kind of, because we didn't raise enough capital to, follow on into all 90% because we thought it was going to be 25, 35%. We had to be pretty, decisive of who we were going to follow on to or not. And there's a lot of great companies where we weren't able to follow on because our fund one size just wasn't as big and we didn't expect so many to like be amazing and graduate. With fund two, now we're actually expecting there to be so many to be so amazing based on our prior experience. So we're going to have a lot higher kind of follow-on rate. And I think with whoever you raise money for, that's a great question to have in your conversations with them before you even, sign the deal and take their money, of sort of like how much of their fund do they have reserved for follow-on? What are the metrics and milestones you need to meet to sort of qualify for that? And like, what's the percentage of their portfolio that they are intending to follow on for? Just so you have a roadmap of like, okay, if I build this in the next 12 to 18 months, like I'll either be checking their boxes or not checking their boxes.
Got it. Okay. Next up from Jordan, we have a question. It's kind of multifaceted, multiple parts. Again, do you invest in brands that don't have a large team? I know you elaborated on that, the solopreneur piece a little bit earlier, but she also added in there are well-known advisors as well. And
yeah,
so
I mean, our best portfolio company in Fund One, Performance-Based, she's actually a solo founder. Many of the companies we invest in, when it's just a couple people. So a solo founder doesn't mean you're only necessarily a team of one. It could be that you're just, the solo founder, and then you've hired people around you, or you plan to hire people around you. And I think if you haven't done that yet, because you haven't raised the capital yet, if you have people in mind of like, okay, here's who would be my hire number one, my hire number two, and here's, their skill sets and why they would be my hire number one and hire number two. That's a good thing to be talking about to potential investors and showing that in your budget of, if I raise 500 or 100,000 or $1 million, these are the three people that I'm going to call up and like bring on board, once the round's done. or even if they're working in a part-time capacity, but then they'll go full-time after you finalize your pre-seed funding, for example. That's something great to like bring up and identify if you haven't had the resources to bring them on board fully yet.
Appreciate that. And I think we're right at time. So I just want to thank you, Elizabeth, for sharing what's going on at SoGal Ventures. You got some jobs to fill. So you added a little component there as well. Folks, make sure, Elizabeth, you put that in the chat, I believe. So for those who are interested, tap that link and see if that.
I'm also putting my email, like when you guys are ready, if you want to send a deck or anything too, feel free to send a deck. We see over 100,000 deals a year, so I can't respond to everyone, but I guarantee you I do look at every deck that is sent to me.
Appreciate that, Elizabeth. And again, just being, having that open door policy for the founders who are attending, that's amazing. Great opportunity. And appreciate you sharing what's going on at SoGal Ventures. Looking forward to seeing what comes in the future.
Yeah, thanks so much for having me. Have a great day, everyone.
All right, now. Next up, everybody, we will be transitioning to the next segment. We will be speaking with the folks from MEC VC. We'll be speaking with Bruce Hamilton and Mario Mitchell. So looking forward to that. In the next minute or so, we'll be transitioning over.